Good morning, everybody. Welcome to the Flow Show. The new week begins. Lots of trading, hopefully this week. A very busy week ahead. Hope you all had a good weekend. Morning, Kate. How are you, mate?
Morning, Ryan. Morning, everybody. We are ready to attack October. And yeah, not a lot has changed really over the weekend. Still a strong dollar.
Yeah, so that's continued straight off the bat. Yeah. Well, we'll get through all the headlines, explain why the dollar is potentially staying a bit firmer. As usual, we will start across in, actually we're going to start in Japan this time. Just a little bit of box ticking. Japan spent absolutely zero on intervention between August 30th and the 27th September, as per their monthly report on such matters. So no stealthy interventions or anything of the like going through the books there. The BOJ issued its summary of opinions, which is almost like another set of minutes statement, if you like. Again, like the ones we got for July, the minutes we got for July last week, it was had a more positive slant in terms of corporates and the potential for inflation to be a bit stickier than they previously expected. One of the passages I've pulled out from that was that a positive wage setting stance has started to spread among firms, and they have maintained their appetite for business fixed income. And given this, a virtuous cycle that leads to inflation accompanied by wage increases seems to have started to emerge. The rest of it was still lots of caution, you know, not there yet, haven't seen prices get into that stable marker that they're looking for. On the ending of some of the easy measures, one member said that they must tie the end of YCC and negative rates to the success of achieving a 2% inflation target. So that's just reiterating their bar for when they might start easing, and it's all potentially going to come in at that point. There was a BOJ official, excuse me, talking about the Tenkan report, and the main specific from that was that it's showing some smaller firms are unable to pass on higher costs versus big firms. That might be something that Kishida wants to address. We've had the usual suspects out talking about the moves in the yen. Suzuki and Matsuno saying that they are carefully watching FX moves with a high sense of urgency. Suzuki's been out actually twice to utter those calls. On another front, apparently Japan, according to Nikkei, are going to ease IPO rules in October. This is to potentially allow a greater price flexibility for those IPOs. They tend to set a bit of a band for IPOs, sort of a high and low band. But what that means is that they largely are set to that band. So if something, you know, if something's oversubscribed or something like that, they don't have the opportunity to increase the price and get that extra investment in via that IPO, which some in the IPO space have said is a bit of a negative in getting that extra money into firms. So they're going to increase the band, allow, I think it's 20% flexibility on top of the IPO band, if you like, just so it gives them a bit of room for firms doing those IPOs to take in a bit more money. Right, it's been PMI day all around the world. China kicked off this weekend with some improving numbers. Manufacturing improved to 50.2 in, this is the sort of mainland PMI. So it was last at 49.7, came in as expectations, and moving back into expansion. Services also moving a touch higher, up 2 pips over expectations and 7 pips over the prior number. Then we got the Beijing manufacturing number, which looked to be a little bit softer. Missed expectations, down on last month, but still above the expansion contraction line. Services as well, also edging back. So a little bit of a mismatch in terms of which way the numbers are going between the two. Believe whichever one you want to believe. The takeaway from that is that everything is still in expansion, although this might be flagging some worries coming along the lines. Over in Australia, also manufacturing looking a bit softer, beating expectations, but still down on last month. Overall, there's that Tankan you can see there, the index. It's an indicator, an index on some of the big industries over there. They look at small, big manufacturers, non-manufacturers, so on and so forth. Numbers there largely okay, depending on how you want to look at it for that one. But that comment for the BOJ member on smaller firms passing through prices a bit worrisome, as said. Manufacturing in Japan, following the same lines, still in negative territory, a little bit lower than expected, and just over a whole point lower than last month. Coming through to some of the others in the European zone, Spain's PMI a little bit better, but still in contraction. Pretty much been par for the course today in terms of those numbers. Italy, the same thing, up a bit, but still looking soft. France letting the side down worse. Even Germany had a little bit of an improvement. Go Germany, goes the Germans. But still very ugly numbers from those guys there. Greece, I know Stelios will be looking at this one, looking a little bit soft, just hovering above that line. As you can see, some of the other there's the pan Eurozone number, 43.4 there or thereabouts versus the flash number, which was also 43.4. The UK as well, a little bit of an improvement, was expected, but we're still in the negative. So you can see how things are looking there. A little bit more positive, or rather a little less rubbish, we'll call it that. ECB's F.A.C.E said last week that the ECB is probably done raising rates. Another one firmly on the sidelines. ECB's De Guindos said inflation will keep slowing in the coming months. The Riksbank had their minutes out. A lot of comments that we already know, and Riksbank Steden said, though, that when the krona starts to strengthen, it could happen fast. Obviously, they're doing their hedging, intervention, hedging. So that's their fight against their weakening currency over there. Just coming back to Friday and the data we got out the US, obviously the PCE number was the big number. No real shocks in the release. All came in as expected. Confirmed that headline PCE ticked up, but the core came down. So pretty much following what we saw in the CPI report there. The numbers weren't too bad in the consumption and spending data, or the income and spending data. As you can see, income's up 0.4% as expected, spending 0.4% as expected. The key to take from that is that those numbers are still relatively positive. So again, just more signals that the US consumer population isn't looking too negative at the moment. Even the Michigan number, the final number, this was improved a touch over the flash reading. So that was the flash was 67.7 from 69.5. So we had a little bit of an improvement there. Improvement as well in current conditions, and a little bit softer on expectations. Now, these inflation numbers pulled back quite sharply from last month, but they reversed a tiny bit of that. We saw them drop to 3.1% from 3.5. That went back to 3.2. The same 3-pip drop there over last month, and then in the final number gained a pip to 2.8%. Still running sticky is what we could describe that right now, but maybe it's just starting to go the same way. We also, if you remember, saw the consumer confidence data last week, which still had sticky inflation in that metric there. Fed Williams said the Fed is at or near the peak level of interest rates, sees ample signs that inflation pressures are waning, and numerous signs that the labour market imbalance is diminishing. The shutdown, we've had a can kick. 45 days is our can kick. They finally got around to passing something or other over the weekend. And so we're going to get our data this week, which is pretty much what all we're concerned about over here. There is a bit of a bum fight within that, though, because they pretty much put on pause any further money to Ukraine. So that is, as I say, going to create a bit of a fight domestically, but it might bring up a few comments internationally about that. I've already seen a couple of comments saying the US shouldn't pause any funding or further funding for Ukraine. Not really anything that should be market related, more geopolitically related. But anyway, we've got a can kick, 45 days, we come back and do it again. As for the strikes that we're seeing over in the US, those strikes got expanded after they all failed to reach a deal on the latest round of talks between firms. Ford has been scaremongering, their executives saying that 300 to 500,000 supplier workers could be laid off because of the UAW strikes. So they're doing a bit of scaremongering there. OPEC Plus ministerial panel has reportedly said it's unlikely to recommend any output policy change at the October meeting. So no potential further production cuts to come at that meeting. That's all I've got on the headline front. Kay, anything you found over the weekend?
Not really, mate. Not much more than what you've already been talking about. Worth noting is that the BOJ announced an additional bond buying on, I think it's on Wednesday or so. So they are still trying to smoothen the yields on the JGB going higher, but it's really something they said they would do. So they are just adding a bit of liquidity. Don't want it to go too far. UEDA made some pretty strange comments as well. Well, I thought they were strange anyway, saying that dispels the view that risk of loss will impede easy policy exit. We all know that those if the rates go higher, of course they will lose money on their bonds, but it's all on paper, right? I mean, they're never going to take a loss at the Bank of Japan. So I reckon it's the media again playing on the fact that those future yield hikes or rate hikes could affect the Bank of Japan P&L. But we know that. We know it's the same for every central bank as well. So he said it would not really impede decisions on further rates. But then let me. I'm just trying to find back the line that I found a little bit odd in there. Yeah, no, I actually said they will consider an exit. It's still the same lines basically, but he's still saying that they must keep a loose monetary policy as well. So I guess nothing really changes so far. No, for the rest in the headlines, these China numbers, we are in Golden Week in China, right? China is off the whole week, so we won't have any PBOC fixings. But I guess they will keep a very close eye on what happens in the Chinese yuan anyway. While they're on holiday, we know that those officials are not really ever on holiday. No, for the rest, haven't seen too much. Looks as if the Tankan is doing pretty okay in Japan, which is relatively good news. But of course, as you already mentioned, the smaller companies not passing the higher prices, that'll be likely, at least in parts, addressed by Kishida's fresh stimulus. So no, everything is same. Market is just reluctant to take it through 150 in the dollar yen where right now. But if you look at the yields, we're on pretty important levels again. If you start to break those US 10s above here 462, 63 and hold there, I guess the test is really not far off. I reckon we're still in heightened intervention risk territory. But if the rest of the dollars continue to go up after the deal has been found, it's probably going to be a plaster on a wooden leg if they intervene right now.
Yeah, I should think so too. Yeah, I mean, I don't know what if it's difficult because is this dollar rebound on the back of the shutdown passing or the vote passing? It's still only a short-term can kick, and we come back and do it again. So I don't know if it's if that's really the excuse for the dollar ramping higher. But it is what it is. If it does continue for a bit longer, then one might think there's more pressures at play than what we saw last week for the end of month flows, and that this higher for longer soft landing trade has got a bit more legs to go. I think it was always going to be important what happens today after the end of month and end of quarter that may be deciding things. But you've also got to remember, as you swap quarters, and this is particularly prevalent at half year, you sometimes do get a little bit of follow through in the flows in the first of the new quarter. Anybody who was squaring up or repositioning, balancing the books into the end of the quarter may be putting those positions back on again or doing their reallocations in the new month. So still a bit of a funny time to judge what's going on, but we'll see what the Yanks want to do with it when they all turn up.
I think it's, we are the first week of this October is pretty heavy on the data front as well. So I guess a bit of follow through, bit of yields ticking up, putting a bid under the dollar. But I think that we need to let the data come to us right now. Everything, all else equal, we're still in a high debt scenario. We're still in a treasury issuing bonds scenario. I don't see too much of a change, but the data now are going to tell us what this dollar is going to do start of this month. We've got a lot of them, right? This week already. We start already with the ISM today. Then we're going to go over into whatever jobs data, that a week of jobs data, the JOLTS, the ADP, and then of course on Friday.
Two central banks we got,
Sorry?
Two central banks, RBA, RBNZ.
Yeah, there's a lot happening, but I was only looking at the US and for the dollar. So Wednesday we got another slew of ISM data. Thursday a little bit quieter, but then on Friday we've got the big one, the big domino. Is it still going to stand or is it start to wobble on the NFPs? So far I think there's nothing that really stands too much in the way of this dollar. Especially if those data are not going to fall out of bed, we're already seeing it. We had a really short blip this morning just at the European Open, but it's already been reversed. The dollar wrecking ball may be back in full force already, and if it's this week, if those data hold up, then I fear, I don't know for if people want to be long or short, but for those short dollars I fear, because then we are going to go into we're not going to be far from liquidity issues and stuff like that, and the dollar could really go on a hurt spree higher if the data don't come off this week in the US. For the sake of risk, for the sake of perhaps a bit quieter or markets that stabilize a little bit more. We should see a little bit of cracks, not monstrously bad numbers, but a little crack in the dollar harness wouldn't hurt the market. But if they don't come off, then I really think the dollar is in for an absolute roaring quarter again.
Yeah. Yeah, it's going to be, you know, as traders, we're always waiting for the next piece of the puzzle. So the next piece of the puzzle for me will be today, what the dollar does today. Can it sustain that? All the data, as Kate says, will the data back it up? We'll get to see later on with that ISM coming out. But yeah, it is a big week for jobs. We're not going to have to just rely on the ADP now that the shutdown's been averted. Jolts tomorrow. Fairly important in terms of just judging whether there is further weakness in firms putting out job ads. That's what really it's all about. You know, a sharp slowdown there means that firms aren't looking for as many positions. That tends to obviously mean a weaker jobs market, potentially, we shall say. But yeah, we've got the RBA coming and the RBNZ. Just for those two, the RBNZ will be overnight. The RBA will be overnight. I'm not expecting anything from those guys. I'm expecting the same. Their statement's been pretty much a rinse and repeat for the last couple. You know, may need to do more, but otherwise they're in restrictive territory. So I'm not expecting anything from those, although we have seen inflation ticking up there like we have elsewhere. So maybe they might drop in something a little bit more hawkish in terms of running against the risks of inflation coming back again. But apart from that, I don't see any risk for that one. The RBNZ could be a bit interesting because they are firmly in neutral. You know, there's not even commentary about further hikes being on the table or seeing the need for further hikes. They're in rates are restrictive and going to remain there for a while. But the economy isn't doing too badly. They've got a few wage pressures going on there as well. So the RBNZ may be forced to take a bit more of a hawkish line, a bit like the Bank of Canada, just on the back of what the data said. Seem to be in very good soft landing mode, a bit like the US at the moment. As I say, I've seen some wage pressures in play in there, so they may be forced to turn a bit more hawkish. Yep, and then the job situation on Friday, it's double bubble. We get that and CAD jobs. So it's something for everyone. If you're trading the loonie, you need to be watching that one as well. We'll get into those details later on in the week. Right, so quick look at prices. As mentioned, dollar yen. I put a little Twitter survey out this morning. Will we or won't we hit 150 today? You guys can put that in the comments here if you like. Are we going to hit 150 today? Or not? So let us know in the comments on the Zoom chat here what you think. I'm in two minds. I think we may do, or at the very most on the first test we might get up to sort of 95, 96, and then get knocked back from there. But then how low we dip before coming back will be the question. So I might have myself a little scalper up there, a little big figure play. We shall see. Ali says, absolutely yes. Okay, mate. Absolutely yes. Let us know. So just as we're heading towards the time when the alarm clocks start going off in the US and the dollar is looking a bit firmer, just as we're sitting here now, euro dollar had its little weekend holiday above or weekday holiday above 106 last week, and it hasn't been able to get back there since, and now we're looking back down again. I'm still long some of this. I'm going to watch this 105 level very carefully. It was the big level in this move down here. Coming back so quickly is going to put a lot of pressure on this level. So it could be a bit of a maker or breaker for the euro dollar. What happens in this one? If we do break it, then maybe we are going to see some further downside. We'd probably be down to the low 104s not too long after. We got the 50 fib of the move from last year, late last year, at around about the big figure 104. So keep an eye on that. That will tell us what's going on with this trend if we break through there, and then we get it into some juicy levels round about the 103.5, call it, some prior levels, again another support and resistance area that we've seen previously, but it all depends on what happens at this 105. Give it a bit of room. We saw that it went through fairly easily when we tested it, but did the usual knock out the stops before reversing higher. But as I say, a secondary move through 105 or quickly to 105 today won't look very bullish for this one, and I'll certainly be a bit more nervous about my longs. Not looking to add into them at the moment, but I'll see how a test of that 105 level develops if we see one. Dollar CAD looking pretty bullish as well. Again, not too much of the oil influence at the moment. It's all about the dollar today. 136.50 is my level I'm going to be looking at here. I fancied it a couple of weeks ago. I still fancy it. I might give it a little knock, but if there is broad dollar strength still in a lot of the pairs, I'm going to keep it fairly tight. I'm probably going to keep my risk a bit lower, but I still fancy that the Bank of Canada is a bit more hawkish and may be close to saying that another hike might be possible. Certainly, anyway, the data is backing that up, but that jobs data on Friday might be, again, another bit of a maker or breaker. Lots to do before we get there, though. We could be up at 138 by the time we get to that jobs report. We shall have to see. But 136.50 is the level I'm looking for up top. Again, given the dollar strength, maybe just a little scalp trade more than a get in and look to hold it for any great length of time. We shall see. Euro sterling, not doing an awful lot at the moment. We had the fallback from the 87 level, couldn't get through the big 87.20, so we're still mumbling around there. Had a dip, got back through the zone. Now we're back in the zone, sitting pretty much in the middle of the zone. So it's a bit undecided what it wants to do here. It is still keeping a bullish bias to it. We're not dipping too far back after these two moves from the 85s. So probably a little bit of sideways action. But if we get back under 86.40 and down to 86, that'll be a bit of a line in the sand. Under there, things may look a bit bearish below 86, 86.10. But if we stay around here, it does keep the bullish momentum. Maybe we get a test on that 87 level. Fundamentally, I don't see any real reason why this is going to break one way or another. That's all going to be down to the data, what happens in Europe, and obviously what happens in the UK as well. Dollar China, as we know, the Chinese are off, but as Kay said, they will be keeping a close eye on things. Those guys in central banks never sleep. We're still walking this range, 732s, 728s, pretty much. Until we get a break either side of that, I don't expect anything to change. I missed out on selling up here, adding back to my short 732s. I've really sort of just been playing this range. If I get in a bit of an add back at 732, I'm knocking it out 729, 728s, just keeping a course short from up above. But we need to break this 728, more so 725s, 26s, to maybe get pushed down to 720s. Otherwise, it does keep the pressure on. But maybe this is going to be a little bit of a ping pong player through the rest of the week while those guys are on Golden Week. Kay, did you want to have a little early look around?
Why not? Why not? Why not?
Why not? Why not? Right. I don't know. Something's happened. My system's updated.
I'll grab it.
Hang on.
Okay.
I've got it. I found it.
mate.
Yeah. Anyway, yeah.
So, what happened on the? Let me just put the 1 hour here. So this is the differentials, of course. That was into Friday. And then Friday afternoon, the differentials widened a little bit into the fixing. They dragged it even a bit wider. This is the short-term euro and dollar, right? And then we had of course, a bit of a gap this morning after the deal. We're seeing the US 10s. Let me just kill my squawk for a sec. Seeing the US 10s as well pushing higher. Interesting to have a look at that one as well. I'll show it in a second. So for the time being, widening a bit again, but we're still not. We're still in this range, right? And even though euro dollar is back trading lower because of the dollar is bid, etc., there is not really a break yet back down to wider levels, which would accelerate the euro dollar on the downside, and that level will likely. No, that's perhaps a little bit close. Perhaps this one or so will likely come in together with that prior low in the euro as well. So this as well for the US data going into this week. I keep repeating myself, but it's really important because it gives you a good idea on the overall direction of the euro dollar. Really, you don't watch it minute by minute or even hour by hour. You can watch it, but it's like to have a global idea on where the sensibility lies on the euro dollar. Globally, I think we are still within a big area of consolidation. So yes, the euro dollar will move. That's your move from this one is your move from 112 back down. Don't take it 100%, but if you see this direction start again, I reckon the euro dollar will probably suffer again, depending on the US data. We have to watch the US 10s. I think we're seeing here the extension of that move comes in right around where we are now, and we are trying to break the trend line as well. If you look at extensions above, you start to talk about 480s, high 480s, and then the 5%. You know, people are trying to fight against it most of the time, but for as long as US Treasury continues to issue that much debt and the market is still looking at the US economy in for a soft landing or a better landing, perhaps than somewhere else, or than anywhere else for that matter of fact, it could still be that this thing is continuous. And then if we would continue, I reckon there's going to be some pain to be taken, whether it be more in the metals, whether it be more in other stuff, but it's also going to hurt the non-US dollar debt holders, and that could actually then play into to what we call a liquidity crisis. This thing is going to go higher because the market will need to fund themselves, and it could be like a horrible snowball effect, and at the same time drive more and more people into the dollar. So be a bit careful on the medium term what is going to happen here. So this is going to be very important for this week. If we end the week, after all, we are going to get the ISM and the whole jobs picture, because it starts tomorrow and it will end on Friday. So we have like 4 full days of jobs data coming in, which are going to be extremely important because it's one big domino that is still standing, as I'm saying. If we end the week above here, above this 460, call it 455, 460, then I think the dollar is even going to get a bigger bid for the rest of, even perhaps with its usual ups and downs, but even perhaps into year end. You know, we have to get back below this prior high around 433. 440 is already an intermediate one. This I'm on the weekly. On the tighter one, I already have something around 445, 440. So watch that for a starter. If you start to get back below, then there is likely going to be a pretty solid dollar correction as well. So again, I think this week is going to be important, whether it's for yields, for the dollar in general, it's going to be important. What else are we looking at? Yeah, euro dollar already shown by Ryan. I think this prior low here, 104.80s tops here as well. We just ended shy. We just went shy of it on the Wednesday. Then we had this big setback on the Thursday, and Friday, last day of the month, the dollar got bought again. This morning it tried just a quick one higher on perhaps better risk and the correlations, but that's already being undone, because if I look at the S&P now as well, we're already back below 4,300, well below 4,300. I'm just looking. I will look at it a little bit later. Let me just continue first. Yen. Okay, the market is clearly a bit hesitant now, because if you look at the rest of the dollars are under the rest of the dollars are bid. You look at the cable is back down to 121.60, Kiwi is down, Aussie is down, back below 64. The figure right now, the dollar yen is hesitant, right? Because we have this risk of interventions. Are we going to get it? I'm not sure, because as we've told you already very often, the MOF is looking at the trade weighted index, Bank of Japan as well. We'll be communicating with them on the level. So we are hesitant to tackle the 150 right now. The trend line says we could reach 150.5. Why not? All else equal, there is nothing that is changing this picture right now. Although I must say, the Tenkan was pretty good, so perhaps that has a little bit to do with the yen crosses as well, coming off a little a tad. But elsewhere, if you're looking at 0.75% in the tens against 463, right? I mean, they're still very tough to be long yen for longer. But as I said, it's starting to get a little interesting on some yen pairs. Look at this long-term Kiwi yen. I showed that last week already, and I've seen other people now starting to mention it. We are on levels here, right? We're definitely on levels here in the long term. This is going back to the high before the GFC, and then we have those 2014 highs. And this trend line comes in at around 89.5. So we touched it here. We broke on we broke the last week. We had this acceleration into the end of the week as well, and now we're starting the week bang on it. So keep an eye on what's happening. If we start to get back below 89, 10, 15, we might see this as a little bit of a false break. Okay, so look at it pretty carefully where we are going into this week. On the Aussie, that's a daily. We're back to we went back to prior levels here on Friday. We had this shot up in all the yen pairs, and we have already been shying away from it. So again here, this zone around 96, call it 96.5 to 96.85, round it up to 97. The figure perhaps. That's a very, very interesting level already to watch. So if the market is getting really careful about the dollar yen, but you see the rest of the dollar advance really, those yen pairs may start to look a bit toppy. Okay, if in turn we start to break above 150 and the MOF is just continuing to talk but not act, those crosses then are probably going to continue to push against those highs. But I'm starting to be very careful with those yen pairs. Euro yen a bit of a different one, but also if you look at this 158.5 up to 158.75, 1, 2, 3, 4 attempts, and it's looking at that. It's looking at that difficult to keep those levels. Okay, so keep an eye on what's happening here. We are not too far. We are actually bang on it from this trend line here. I think if we start to get below 157.25, there may be more going on. Okay, of course, if we get interventions, this is going to absolutely to go a lot lower. But even naturally, it looks like those yen pairs now starting to run out of a little bit of puff. I'm just keeping a close eye on them, okay? Because it might be interesting enough. Because if the yen starts to catch a bit on its own, thanks to, let's say, data or so, there could be something interesting developing in quite a few of those yen crosses, okay? So yeah, cable is a bit of a question mark for me. We did not really reach the 120.60.80 yet. We're back below, but this trend line. But I think this is now getting completely watered down. I think to start your October, I think the 121, 123/4, 85 is going to be your bottom side, which should really hold if cable is to stand up. Top side, I'm not going to watch anything more than 123.0520. You know, it's wide, it's two big figures, but it's I think good enough to at the start of this October to watch those two boundaries. If you stay inside, we're probably going to trade sideways for a little bit within this range. But if we break either side, then we are going to be in for accelerations, I think, and that's going to be at least a couple, if not 2, 3 big figures either side. Because if you start to break above 123 again, then I think we may actually start to be looking more medium term back to 125 or even 125.5. Okay, so this is my first picture of the month for the cable. Now, let me look at a couple of questions. Did you see any questions that we should tackle, Ryan?
No, I've answered Ali about his volumes in euro, in FX. You know, what banks trade and so on and so forth. Did you look at gold? Sorry, I was answering him when.
Yeah, I'm going to look at it. Gold and silver. Okay, gold. 1860 gave way. It was quite a dramatic end of the month in metals globally. We're closing in on a bit of a level here, 18.25, but I think the big one is going to be around 1800. Okay, 1800. If we start to test that start of this month, stretch it to 1788, I reckon that's going to be decision time if we get down here. To start to even go to neutral again, we have to get back above 1860, and then we can talk again about how it's going to be looking at 1900 around. But it's not looking great. The dollar wrecking ball is still swinging. So yeah, 1828. If that breaks, I think then we're going to have a look at least at low 1800s. Okay, possibly 1788 here. This is a biggie as well, and then we're talking about 1765. A lot of people are talking about this level. I'm seeing a lot of people talk about 1760s in gold. Okay, but already, you know, going back to low 1800s, that would have been a pretty serious move. Silver is looking pretty awful. That Friday move has sucked in a lot of people to the wrong side, and me included. I started to buy here around these 2260s, loaded up a little bit, and then I got stopped out through 22. That's just add-ons to my long-term position, right? Very, very long-term. I'm still looking to be long, but I've had some really good times on my add-ons, but this time it went into the bin. It's looking weak, and it's still looking weak right now. We could be on our, this is your next little level here around 2120. But if you look at this this picture here, we could be on our way to low 20s, right? If this continues, we need to get back above 22.25, 22.45. If it goes back above there, then I think this panic move is over, okay? But in the meantime, we cannot rule out that there's a bit more pain to be taken here. All right, so this is the early October look on silver. If it gets down here, I'm going to close my eyes and catch a big knife. Really, I really think, unless the global economy is really going down the pan, I think levels around here should be okay, because if the global economy goes down the pan, the yields will start to come off as well. So if by then we are here, I'm going to really put my boots on and try to get into it with full positions. But in the meantime, stay nimble, I'd say. Right, that's it on the silver. And do we have anything else? I'm seeing you asking about volumes. It seems that the overall FX market, but the overall FX market is now running around $5.7 trillion volume per day. But that's forward swaps, futures, whatever, everything included, right? It's pretty hefty. And if you look at what retailers are doing, Ali, we are good for about, I think, 5 at best, 8 to 10% sometimes of the daily turnover, but there's 95% which is going on outside what we are doing, if that's the volume that you were talking about. Ryan, I think I've looked at most.
Yeah, mate.
Yeah, just one last thing about the mix, okay? Because we saw middle, and so that was the announcement when FA.C.E said, and I'm showing the dollar mix, but I'll show the euro mix quickly as well. That was the announcement when FA.C.E said that they were going to halve their FX forward program. Then we had another leg higher. I think that was when effectively they did not roll the forward contract. But then we have seen that after the FA.C.E keeping their rates still at 11.25%, that the Mexican pesos gained a bit of strength again. They did not give anything to the Mexican pairs really to chew on. They said that inflation may be a bit stickier as well. So I'm starting to get interested in the mix again. As a matter of fact, did already a couple of snipes, but really I'm trying to unless euro data start to really turn around for the better, I still think there's enough differentials in the MEX versus euro data. I'm a little reluctant on the yen, to be fair, right here and now. With possible intervention risk, but if I would get an intervention, then I will get very interested in MEX yen again. But I do think that for as long as we stay under these several trendline resistances, we've tested several of them and capped on those moves. Here again, went up to 1870 and capped. I think it's still worth having a close look at them. I started at least with small positions and trying to leg into a bit more, because I think the party for the mix, nearshoring, high interest rates, is still that party overall is still not over. And that's it for me, mate. Back over to you for now.
Thank you very much, mate. Well, good start to the week, getting us all up and ready for what's going on. Trade safe this week, folks. Make lots of pips. Watch those ISM data this morning. Keep an eye on those prices paid and employment numbers. Going to be important. Hope you have a good week. Have a great day, and we will see you all tomorrow. Cheers, everyone.
Ta-da.